Good morning, Elegante FX members, followers. Hope you guys are having a fantastic start to your mornings and a good start to your Fridays. And hopefully you guys have a great end to your weekends, or excuse me, your week. But I just wanted to come on real quick and show you some dollar index analysis that I'm looking at and kind of what I'm looking for next week. As most of you probably know, excuse me, I believe on Wednesday we talked about the bearish kind of sentiment that I have on the dollar index for multiple reasons, solely because, I mean, if we want to just start with the basics, I mean, we've been making lower highs and lower lows now for almost a year. We're up back since the middle of December of 2016. This is a year of trading data, as kind of as crazy as that seems. It's almost been an entire year of downtrending. And you know, boy, excuse me. And so that's kind of that's point number one, right? So then we got, I mean, on our most recent lower low that we made, which was in September, on September 8th. We came down, we made lower lows, and then we eventually pulled back. And this is one of our nicer pullbacks that the dollar index has posted in this downtrend. So what happened was I was looking at resistance in here, and I was looking at resistance here. I said, okay, these are our two levels of resistance here, so that if we pull back, those are going to be my areas of interest in terms of looking for at least a resume in the trend, or if we continuously break those, you know, starting to look for those reversals in terms of trend reversal. But I didn't see that happening. So I basically here, this is the resistance zone that we have in between 93.80 and 94.20. So this is this previous high made back in August on August 15th. It's just this resistance zone. That's something I teach in the Big Bang Theory and the Master Course, guys, is that support and resistance, especially on a higher time frame. On a lower time frame, it has a little bit more leeway to it, but it is a zone. This entire zone is resistance. It doesn't just have to reverse on a dime at 94.20. That's not really how support and resistance works in my book, and I think giving us a zone allows us, you know, to prepare. I think it allows us to prepare and get ready, and it's easier to see. So you saw what happened was in this pullback, we had a mini uptrend, right? If you look, I mean, if you break down price action and you know you compound it, you had these higher highs, higher high, higher low, even high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. Boom. So this is what's important. We came up and touched this zone, right? We had some nice resistance, and we ended up coming down to here. So what I would have wanted was at least a break of 92.95 in this scenario to suggest that we're going to be bearish. I don't care about this high. I don't care, or this low, this very small low right in here. I want the big swing low that initiated this rally and made the higher high to break before I even consider anything. And until that low breaks or the previous high breaks, we're in a ranging market. So if you look here, we came up and made those higher highs, but then we saw resistance, right? So we broke this low. I call this an intermediate low, okay? And what that simply means is that's just something for me, okay, we've at least broken support. That at least gives us the opportunity to see this low, right? To see this low that I want to break. Boom, we break it, right? So this is where we broke, and we come down and we test this recent one. Then it's just testing all of those continuously, right? Okay, we break this one, let's look for this one. If we break this one, let's try for this one. If we break this one, blah, blah, blah. It's a marathon, right? You got to get those objectives. And so basically what we have today is we broke, came down, tested the 92, oh my boy, that's kind of annoying. The 92.95 area, we broke it, came down into the middle of this range in between 92.50 and 92.95 and pulled back. I had these three lows marked off. We had support here because it was tapped once, twice, 3 times, 4 times before we could break it. There was a nice range here. I thought, okay, this is probably good resistance, right on a 61.8 as well, so I'm going to keep this here in mind. We came up on the initial tap, had a nice bearish engulfing, went down for a little bit, and then we came up and rallied. And just now with that CPI data number coming out, we had a nice double top form on the dollar index, and boom, we came right back down to test these lows. But we're seeing support here. So that's going to be kind of interesting to me because, I mean, if we're not going to break this low, then we're going to range. And if we do break this low by the end of the day, I bet we could see 92.55. So that's kind of what I'm looking out for on the dollar index. In terms of long term, on the daily, you know, I mean, for me on the 60-minute, I'm playing just all of these levels up until we get down to here. Okay, that's what I'm looking for. Okay, we have to get to here first before we can look for anything else. But after that, I would be willing to look for a test of 90. 90 is the next big round figure. Not much price action around 90, the round 90 number. But you know, it's definitely a big number that we're going to have to test, and that's going to be my next target for sure on the dollar index. So keep an eye out on that. Euro USD is everything just reversed on the dollar index. If you look here, we came down, we double bottomed on this support here. We had this support zone on the daily, broke this high, came down, retested, test this high, broke that, broke this high, tested here, broke it, and now we're pulling back, and now we have this CPI data that's giving us a nice rally. So we'll have to see what happens here, but this is pretty much all the action we're probably going to see for a Friday. You guys know how Fridays go, especially with with press releases and data data figures coming out. That's typically you get a nice spike in volume, but then after that, it's pretty much the volatility is downhill from that point on. So there's not much really for me to be looking forward to. USD Swiss. So I wanted to talk about this USD Swiss setup that I was talking about at the beginning of the week. USD Swiss has this trend line here that you can see all the way back from a high that was formed on December 15th of 2016. A high that was also formed on May 3rd of way too late. May 10th of 2017, and now we're retesting it here again this week. So you saw we come up, we test this line, and we formed a really nice, a really nice shooting star candle, hammer candle, whatever you want to call it. Just all you need to know is the psychology behind that candle is the fact that there were buyers in place, but there were more sellers at that level, and there was a strong amount of buyers. Right, we had strongest amount of buyers here, and then sellers came in and took it down. That means that there was there was either a lot of sell stops here, or there were a lot of sellers and sell limits waiting here. Up in this area, which means there was either way there was a lot of sellers, right? There's a lot of selling going on this level. So that's interesting, and that's something you definitely need to take into consideration. So what do we look for here? Okay, we have this swing low that's right here. Boom, that's broken. That gives us the opportunity to test the original swing low, which is right here. Broke that, came up, pulled back, consolidate, starting to reverse, break the EMAs, go down, test that level. Break it, consolidate, double top, and then you get the CPI data. We tested 97.10. So here's what I like to do in this case scenario. I don't like to enter in any of this sloppiness. I don't like it. You know, it's hard to get a clear entry off of that. So basically, what I would look for is I would just look for a break of the 97.10, and then I would look for an entry somewhere down in here or maybe up in here as in the form of a pullback. Obviously, I'm not going to be looking for that today, though. All right. USD Jappy, not much here as well. USD Jappy is like slowly but surely making lower lows and slowly but surely getting to the 111.20. But I don't want to talk about that as of right now. Oil, not much to talk about there either. Nice decline in price. So yeah, that's going to pretty much sum up what I'm looking for or looking at, guys. And obviously Bitcoin with a very, very impressive rally. You know, it's I mean, it's insane. I mean, I was talking about buys in here. I'm not very experienced in Bitcoin. I don't really know how it works. I don't understand it. So I thought I don't like, buying and investing in things that I don't really understand. I don't understand how blockchain, I don't know. I just don't understand it. So that was something I was a little bit skeptical about getting into. I was talking about buying on a day trade, honestly, or like a short-term position on this break that occurred here on this triangle. Or this pennant, whatever you want to call it. Nice rally, consolidate, boom, consolidate, breakout. I thought that would have been a nice buy, and obviously at this point it would have been because, hell, if I would have, how much does it? If I would have bought one Bitcoin, I'd be up over $1,000. I mean, that's kind of weird to think of. It's hard to think about. One of my partners is killing it in Bitcoin right now. They tens of thousands of dollars. That's all you need to know. So just in terms of a couple days, and actually 6 figures. That's awesome. And it's awesome for the people that understand it, especially because this is huge opportunities here, obviously, because it's catching on. Bitcoin is definitely catching on. Down here, it wasn't catching on way back when, or way back in 2016. It wasn't catching on yet. It had been catching on. Don't get me wrong. It was rallying, but nothing like this shit. This shit's insane. The amount of upside that we've seen is crazy. I've never seen anything like it, to be honest, except for back. In 2001, when all the tech stocks were fucking rallying like crazy. I mean, every other day there was a goddamn tech stock that was going up 100 to 200%, and I mean, you just knew it was going to burst. Let's see. Let's test something here. This pullback up to here. We supported on the 161.8 there. If we were going to do an equal pullback on this leg, that'd be a deep ass pullback. That would be a deep fucking pullback. That is for sure. But if we wanted to match this pullback here, if we do decide to pull back, which I mean, after all these rallies, we have decided to pull back. So if we decided to pull back right from this point, this area, I think, could be good for possible scale-ins. If I'm doing off of pure technicals and not off of any kind of personal understanding of how this fucking thing works, if I'm doing pure technicals and pure price action, that box, there's an interesting area that I think that you could get long in. But I mean, once again, I just don't understand this shit. I don't understand how blockchain, all that shit, I just don't understand it. But there's clearly money being made. Millions of dollars were made overnight on this rally because there were a shitload of people that were scaling in here, scaling in on the way up, scaling in here, and now they have multiple positions all the way down from in here, and they've quadrupled their investments. So the congratulations to the people who have been able to kill that shit on kill that shit pretty easily. So I think that's gonna sum up pretty much everything I have to say, guys. I'm not looking at much of anything else. It's kind of a good weekly wrap up of what I'm looking at, what I'm looking for next week. With that being said, guys, I hope you all have a fantastic weekend, and I'll see you on Sunday evening or Monday evening for a kind of get an idea of how the markets are reacting. All right. So once again, have a good weekend, guys, and I will see you on the next video.